Good morning. Good morning. Happy Monday, everybody. Welcome, welcome. It's good to see everybody. Happy Monday to you, Stephen. Good morning, Perry. Good morning, Bob. Okay. We're going to give it just a second and let the stragglers come in. Good morning, Suzanne. Good to see you. Welcome, welcome. All right. Excuse me. Welcome out to the Market Watch Group weekly opening bell. It is fabulous to see everybody. This wonderful, I cannot believe it's almost mid-November, right? Like it's basically mid-November. This is the weekly opening bell. My name is Scott. I will be your host. Let's dive in. These are the disclaimers. If you ever want to read through them a little bit more detail, they're found in your email. Here's our agenda. This is what we do in our Monday mornings. So yesterday we postured, right? Sunday is posture day, where we assess all the different components of the market that give us an idea of the strength or weakness or neutrality or whatever we perceive from the market. Are conditions improving or are they worsening? What are we thinking about trading from week to week based on the ongoing posture assessment? The weekend should also be used for cleaning up your watch list, which is something that we do. We get rid of ones that we're like, I don't think I would trade this now. Nothing materialized, and it now is showing worse conditions. Bob said our concern this week may be potential shutdown on Friday, right? Which is always something that the market is leery of. It's potential shutdowns. Absolutely, Jeff. Give me just a second, and I will bring up the posture so you can see the update. So we're going to look at the futures, the news. We're going to review the calendar. We're going to review the posture. Talk about what would our mindset be for trades that we have on, and look through our watch list and say what do we have setting up now. So let's dive into that. So let's start off with the the futures. Actually, so we're November 13th. I'm going to start off with this. And that is that we still may have this last, it can go up and down a little bit here without necessarily moving. So let me show you why I want to bring this up. I have to send the I didn't get a chance to send the Discord email, but I will send that out today, which will have a new invite for those of you who haven't had a chance. If you've gotten it before, you could use your old invite, but I'll send a new one out to get everybody on. Here's what we're looking at. We didn't get this here. We didn't get that, but we did get that. We got this kind of a big jump, right? And now we're kind of in this type of an area here. So is there still the possibility of a consolidation? Yeah, I think it could go either way. I think we could see a pullback. So if you put new bullish trades on, your thought would be, how do I stay with them as long as they're still valid, but not ride it down? If you didn't, or if you're still looking for bullish trades, there definitely is Still the possibility of another consolidation followed by this late November, early December bounce. What is the seasonality index? Great question. Whoever asked that, you came in without a name. It looks like you're on a phone, and so I apologize that I cannot address you by name with your question. Otherwise, I would. But you did have a great question. Luther. Thank you, Luther. Okay, so Luther asked, what is this? This is a composite representation of the S&P over the last 20 years. And you'll sometimes see 25 years and there'll be slight differences. But essentially, this is a composite representation of what does the market have a tendency to look like. So for example, good morning, Michael. Good to see you. If you've ever heard the phrase sell in May and go away, you're like, what do you mean? Like, what the hell is that? What are you talking about? Well, what we tend to see is at the beginning of May, it tends to cap a rally. Bam, we get this nice rally up. And in May and June, we have a high degree of tendency to go sideways. Then we get one late June through July bump. And then we have a tendency to go sideways through September. So the summer months, a lot of sideways action with just one bullish bridge. This year, we were more bullish than that. But I'll tell you what, the cyclical market helped me significantly this year. There were times when these bottoms were just like spot on. And it's just a nice historical representation that shows you what are the seasonal patterns that we tend to see. So when you hear people talk about like a fall or a Santa rally, where does that come from? Well, let me clean this chart up. We tend to see this bullish end of year rally here. And we tend to get 1, 2, 3 big windows. Sometimes even a fourth one in there. Boom, opens the window, bunch of bullish tradability, then we wait, and then we trade. That's where we're thinking is, are we now at this possibility here? We didn't get this one, but now we're thinking, do we still have some legs? Well, our posture, let's jump over there. Now we say, well, here's what the seasonal says. Here's what the seasonal says. But here's what let's pull up SPY. And you can see we've gotten this huge jump. And then on last week, it looked like it was going to start to roll over, and then we got this little pop. Just out of nowhere, right? This little pop out of nowhere. How do we assess the market last week? Better. Okay, so here's our scoring from yesterday. Long-term stayed the same. Our long-term trend, in my opinion, is intact, is the way that I would describe it, which means we deviated for a week, but then we recovered, and now we're just back in this trend that I have drawn here, which I'm scoring at about a 0.75. Could you make an argument to call it a 1? Sure. Could you say a half? Yeah. I would have a hard time with anything outside of that, personally, but everyone has to trade their own forecast. So I would say definitely this looks still short-term bullish. Longer-term bullish. What is the short-term? The short-term, I scored it an extra half a point. Why? Because right at the end of the week, we broke this support, this resistance level. We said this is pretty strong. It was hitting resistance here, and then pop, it just kind of popped it. It might fall back down underneath it. That doesn't mean that much to me, because it's not that I failed to hold a high. Now I would look at my lows. The last low I have is here. I don't see this as a low, right? I don't, as of right now, I don't see this as a consolidation. I see this as the same move up, and it's hitting resistance in here. So I'm not going to see this as a low. My last low's down here. So if this thing pulls back like this, I'm not thinking that this is a lower low than this. I'm thinking that this is a higher low than this. And I'm wondering if this is going to start to become my new short-term trend. That's what I'm looking for. Are we going to establish a short-term uptrend, much like we saw back here at the beginning of the middle of the year? That's what we're hoping for. Look at the angles of those. Those would be very, very similar, right? So that's what we're looking to see is what do we establish coming out of this? Okay, let me show you the rest of the posture real fast. Volume stayed the same. We did not get any changes in volume, but now all of a sudden, next week, even if there's no volume at all this week, meaning, and when I say volume, I mean above average volume, which we would then assign to either be representative of buyers or be representative of sellers. Last week, there wasn't a single above average volume day. Could be the same this week. We may not see any above average volume days, right? And if that's the case, would our score automatically stay the same? No, and here's why. Because as we look at volume, remember, we're looking at above average volume days to be representative of higher levels of conviction. So if I drop this down to a 1 month daily chart, these 1, 2, 3, 4, 5. These 5 days here, no, let's see, 1, 2, 3, 4, 5, are gonna fall off next week, right? So that's an above average volume day for sellers. That's an above, no, maybe that is that? Oh, that one's right on the bubble. That one definitely is. So those are gonna drop off, right? So next week, it's going to look like this, plus whatever we get this week. And you'll notice, yes, there's still above average there, and there. But now all of a sudden, that's it. That wasn't an above average. So we only have 3 days, and they're old. They're sitting out here where it's getting stale. And then we'll have new volume over here. So even if we don't get above average volume days this week, I think that we're going to see that shift where the above average selling days are falling out of the analysis. So I think that's going to improve unless we see above average selling days this week. It doesn't look like that's what the sellers are trying to do. Well, of course, we'll see what happens. We scored major market. The NASDAQ reemerged at our scoring time frame as a leader, so we gave that 1/4 of a point to represent the fact that, technology has been and is likely necessary to continue to be a leading sector if we're going to see this market move bullishly. We need Apple. We need Microsoft. We need the chips and software to do well. That's certainly indicative of what an overall representation of the market. Sector stayed the same. And then the VIX improved by 1/4 of a point. So overall, we're now at a 2. So it's I would say still right at the transition point from neutral to slightly bullish for me. But that's 2 weeks of improvement, of improved conditions. Yeah, things are looking up, it seems, right? But as we look at today's market, our futures, we didn't quite get there. We were looking at the posture. Our futures were down slightly. Let me go back over. Our futures were down. They were down quite a bit overnight. I woke up in the middle of the night, had to let the dog out, and I checked the look. I'm like, oh, futures, they were down about 0.5%. Now we're down 0.33 on the S&P, 0.19 on the Dow, 0.4 on the NASDAQ, 0.4 on the Russell. Oil ticked up just a little bit. What are we looking at? Inflation. But it's anticipatory. Inflation hasn't come yet. We got to look at the numbers. They're coming later this week. We'll look at the calendar here in just 1 second. U.S. downgrade in focus. If the government shuts down, I believe, is what they're looking at. but we do have that possibility. A new bank under scrutiny. Oh, Morgan Stanley. Okay. Tower Semiconductor. Let's see. Stocks rally. Consumer prices rise. What consumer prices do we have? So what we do have coming up this week, a little bit of Fed speak today, but not really much now. The real quick peek at this, it's dropped a little bit, right? We were at 10-1. Now it's more like 6-1. 85% to 15% of what? The 85% is the probability that the Fed rate remains unchanged. So the market right now is pricing in that the Fed is done. Not like, oh, that they're done. That's it. That's the last meeting of the year. And if they were going to do it, they would do it this year. And so they're done. That's what the market thinks. However, I think that we need to be careful that if this CPI data, and then on Wednesday, this PPI data, sales looks okay where it is. Yeah, that's probably about it. Those two sets of data are extremely important. If we see an uptick, I think that the Fed has to take action one more time. They don't want to go into next year with a feeling that there's pervasive inflation. So if it feels like it's stopped dropping, then I think there's concerns at that point. Okay, so the what for this week? Our posture improved. We've basically said we're willing to take bullish signals. Great. Let's go see if we have any. Right? Let me know if you have any questions, comments, or concerns. Yeah, you can see where the opening range just here. And again, it's the first few minutes. So the sellers opened the market slightly. How do we know? Because prices were down. Right? Just slightly. And then the question is, they opened and then they pushed up a little bit, but then they pushed right back down, and now they're pushing even further to the downside. Well, we're 4 minutes in. We're about to see this candle lock itself in, and then it moves to the next one. So if you're somebody who has the ability to be here all the time during market open, this is something that I will watch in the same way that we do it here. So what am I going to do? I'm going to do my pre-market routine somewhere between, for me, it's 6:45 and 7:30, right? In that 45-minute window, we do a little bit of a pre-market routine together, which is similar. What do we look at? We look at the futures. What's going to happen? We look at the news. What could happen? What potential is there for a disruptor or for a motivator? What would we each have done individually? We would go and look at any trade you're in. Remember that you can come in, if like on Thinkorswim, now the market's open. How do you get to the recorded meetings? 2 ways. I'm going to be, in fact, that's a great question, Fred. They come via email. So if you go look at your email, every time I post, I send an email out. I give a little synopsis and I say, here, click here to watch today's recording. Everything's posted on YouTube. I'm actually in the process of making, everything was set as private, so they weren't showing up. If you wanted to go back, you would have to have the link. But I think we're going to open it up so you can go back and see it. But it's on YouTube. The email has the link to YouTube. So that's the easiest way, is just, if you go to the exact day you wanted to listen to, you'll find an email from the Market Watch group scroll down and there's you can find it in there. But I am going to make it easier to access that, the recorded content. Okay, great question. Appreciate it. There it is. You can see the sellers coming in. So if I came in at 7 o'clock, 30 minutes before the market opened, and I looked up here, you see my drawing, there was a bid and an ask. Now, this square number would still be showing Friday's close. This BA number, which stands B for bid, A for ask, would be showing the bid ask, meaning the current price in the pre-market. So remember that we have a pre-market from for an hour and a half, and we have a post-market for 4 hours, pre-market trading and post-market trading. So whenever you see somebody report earnings right after the market, and then you're like, it's already up or down, you're like, how could it be up or down? Market's closed. Because it's trading in the aftermarket, right? The aftermarket is done directly through limit orders. So you have to put a limit of, I'm willing to buy at this price, I'm willing to sell at that price. And if somebody says I'm willing to buy it at this price and somebody else says I'm willing to sell it at that price, the computer makes a connection, a love connection, and it, you know, one pays the other, they exchange it, and that's how the aftermarket works. There are no market orders because the market's not open. But every time one of those orders fills, it marks it for the price, so we know what price it's at, right? So why is that important? Well, let's say that I came in and the market futures were down 1%, 1.5%, a kind of a nasty day. What should I be thinking? I should be thinking, oh my gosh, do I have any trades that are going to trigger stops or trigger stop, you know, dominoes that tell me I need to get rid of a trade? I don't want to stop to trigger on the open. If I had one that was going to trigger on the open, I would cancel the order. And I know people are like, oh, I've heard you should never cancel stops. Well, that's true. You should never do it unless there is a specific extenuating circumstance that says, you know what, I'm not going to get obliterated by market makers and terrible pricing because I have a market order on the opening price. Not going to do it. I would rather wait 30 minutes. Even if the price is a little lower, I'll still get a better price because the market's going to settle down. It's going to be terribly priced when it first opens. So those are the things that we're doing in our pre-market, is making sure that the trades we have on are intact and have a plan and see what we're doing with it. You can see right now, though, once the market's open, I'm waiting at least 20 minutes before I start deciding anything about how this market's moving and what does it mean. That the first 20 minutes gives me what I call my opening range, right? So right now, it's a huge, actually, if you've ever, you know, been interested in day trading, this opening range concept's big. Day traders love it because they just sort of wait. They say, okay, here's the opening range, and they're waiting to see which way does this thing come out. If it comes out this way, then we're thinking now we're going to have a day like back here, right, where it just trended all day long to the upside. Well, where did that start? Started back at the opening range. And so on to the downside. If we came out of this way, then I'd be thinking, oh man, we're giving it back. This is very big. Now, can it go up and then at lunch come back down? Yes, we definitely see things like that. So I certainly cut my days in half and think, what am I looking for here? What am I looking for on the second half of the day? All right, let's go in and let's look through our watch list now. We have a sense of the opening range. What is my overall thought? My overall thought is we're still hitting resistance and we're still looking for a consolidation back down. But we do have a few trades that we've said, hey, you know what? This looks all right. Look at Apple and look where we are. You can see we're just stuck in this overbought range. Now, does overbought mean it can't keep going higher? Absolutely not. This is a great representation of a time when something went overbought and it looked like it was going to stall out, right? It's at resistance. And then all of a sudden, it's a little higher. It's not much higher. It's a little higher. And it's still just kind of grinding along at this overbought condition. It's a tough one, right? Because can it keep going higher? Yes. What does that mean? It means that if I was in it, if I was in this trade, would I be like, hey, let's just put a trail stop on and see if it can keep going? Yeah. But am I going to buy into something that's in this extreme overbought scenario? No, I can't. I can't do that. Right? That's not a rule that produces long-term success. I can't get the right reward to risk ratio. If I'm like, oh, I'm losing patience, it keeps no, we got to be patient. We got to wait. Wait for your pitch. It's going to come. Or if you don't, here's when your pitch will come. Okay? I'm going to promise you this. The second you lose patience and you're like, you know what, I'm just going to put it on. You'll put it on and bam, there it comes. There's the consolidation. You'll kick it off for the rest of us. And it'll pull back. And then the better trade will set up. And the person who lost patience is what? They're losing money. They're deciding if they can stay in or not. That's not the mindset we want. We want to wait for specific things, which looks like what? Well, I've got this level here now. My thought is at least a pullback down like this. Maybe this comes back here. I don't expect it to come back to this bottom level, just so you know. Look back here when it was trending up. And where was it coming down to? Right? Sometimes not even that. So don't be thinking that you're trying to catch it down at the bottom and then ride it to the top. You're watching this to see when the momentum stops and it turns back. That's what's going to give you confirmation that there's a potential trade setting up for you to dive into. Okay. Not there yet. Adobe, not yet. And we said, be careful because there could be a false signal. We said it last week, where it might pop and then come back. And then if you did take this trade, what do you have to do? You have to have a stop loss that says, as long as it doesn't stop me out, I'm not wrong. And you're going to have to be patient. So if you did put any trades on last week, what's the thought process today? The thought process is make sure that you know exactly what it looks like when you're wrong, so that you can either A, stay with the trade to make sure you don't get shook out, or B, you shut it down when you're supposed to shut it down. Here's some consumer discretionary out of retail. American Eagle, Gap is another one. So you can see this still just looks like the buyers paused. It got into this overbought area. Now we're just seeing if the sellers are going to come down. You don't have much time before earnings. There's still a few of these guys with earnings windows, so be careful with that. This one looks actually quite good right here. Aflac. We've got a pinch and almost a turn. You can see the Heikin Ashi is right where it's close. I would say Aflac is in consideration for a trade. Remember, one of the things that I talk about is, are we anticipating a trade? Let me change this back out. Are we anticipating the trade? I do have a pinch, but do I have a cross? I don't know if I do or not. 63.7, 63.49, 63.32. It's just kind of pinching, but not quite turned yet. But up here, you can see we consolidated down and have started turning back up. Yeah, I would say this is valid. Aflac is a valid potential opportunity for us. Absolutely. AIG, same thing. And you can see this one actually did turn. You can see the stochastics has turned. We've started bouncing. It's very much at the same level it was Friday afternoon. This is definitely financials is a sector that we saw some strength in. Insurance is leading. You can see this is the last move we made, pull back. Now what? Now we think it's starting again. Right? Now we think it's going to end up here. I could put my stop loss. If I'm getting in here, I could put my stop probably somewhere like this. So this would be my risk, and this would be my reward. And that's where we're hoping that, oh, that looks probably, I'd say it's a 2.5, maybe even a 3-to-1, something like this. So yeah, I think we have opportunity on these trades. Now, do you want to trade into the first 17 minutes? That's a personal preference. You might wait a little bit. You might zoom down to an hourly chart to say, okay, yeah, I like the way this thing looks. This looks fine. It is a little overbought here. So you could, if you think this is pushing resistance and it might ease back down here towards 63 again, you might wait and see if you can't pick up a better price. Okay, what time is it? We need to get through the rest of the watch list. AMD overextended, looking for the pullback. You can see it's overbought. We just need to let it come back down. Same here. This was just it looked like it was going to turn, and here we are still looking for the consolidation. APH overextended, consolidating still. Ooh, look at Capital One. Capital One also in financials. Another strong area of financials is credit. In fact, insurance and credit have been the strongest of financials from what we've seen recently. Oil's down. I'm good with that. I like to see oil. Oil's struggling a little. There's only one energy oil company that I would have interest in right now. I'll show you that on the list here in just a little bit. Costco looks okay. Oh yeah, Copart smashed higher on Friday and then started pulling back. CrowdStrike. Some of these are still just looking a little overextended. Right? They're just kind of, meandering around. Do we need to wait for just a small consolidation? I would say yes. It's always going to feel, over and over, we're seeing the same things. And that is, there's gold. Anyone trading gold recently? It's pulled back quite a bit. We're seeing this same story, which is that there was like this last ditch hoorah Friday. It popped this thing up here, but it's really all the same move. You can see. Now what? Now we're starting to see the momentum subside. So does this pull back? Does it pull back here to this old level? That's probably what I would be looking for, is trying to find old support, old resistance and support levels that might come into play, and looking for these to pull back. Most of what we're seeing needs a consolidation. Couple of things look all right. This one looks fine. Only problem is you've got earnings. You just don't have time for a trade to materialize. I still need it to turn up to convince me that the sellers are done here. This looks good, right? But there is some concern. IBM, Intel, yeah. This was a little bit of a shakeup through here, and we said that might happen. That's something that Cyclical said. Overall, though, I still think I'm still looking for this to come, this true consolidation. Maybe it doesn't come all the way back from there. Maybe it does. IWM still looks good. I actually am feeling a little better about how the small caps look. They broke their consolidation, clearly. They did it with really strong volume right there. So, now we got this higher high. And now what? Now we're waiting for this. And now we're thinking, is this the higher low? Well, if this turns because this moves up, then yes. What would I trade? I would trade options on IWM. I'm not trying to trade individual small caps, and I'm definitely not trying to trade options on individual small caps. If you want to speculate on small caps, you use IWM. That's the most efficient small cap ETF by way of options trading. That's the standard. Okay, let's keep going. Meta overextended. We need a consolidation. Microsoft overextended, need a consolidation. You're seeing this across the board. But what else are we seeing across the board? You're seeing all this strength. That was strong. Some of it came with big volume, some of it didn't. It doesn't matter to me. That was strong. Now what? Now we have to assess the sellers. That's the problem, right? Is I don't want to buy at the end of, like, what am I thinking? It just went higher over an 8-day period than it has over any 8-day period in the last year. And now what? We want more? That's the most it's done in a year, and you're thinking it's going to just do it again without taking a break? That's hard. That's a lot to ask. NWSA. This one is set up. Is there some iffiness about it? Well, I mean, yes, this has come down. So I have a little bit of that, but I also have a little bit of that. So it's kind of a triangle pattern. Right? Kind of a triangle pattern, but where are we? We're at the bottom of the triangle. So if this thing turns and this thing turns, well, certainly I would love to catch it here before the breakout so that if it pops out of this, the only way to catch it before the breakout is to catch it on the turn. That turn exists in here. So yeah, that would be set up. We're past earnings at this point. So now whatever happens is a little bit unencumbered, relatively speaking. Okay. So I would put that on the list. PDD overextended at resistance. You've got a lot of stocks at resistance right now. When we think about, if you go to the trading plan outline, and remember, in your emails, you have access to these 3 core links, and one of these core links is the welcome doc. This has all your resources in here, but the trading plan that we're working on together is in there. All right, so if you come here and you go to the trading plan outline and you click on this link, you can download a copy of the trading plan outline that you can then be working on. This week, we're working on section 3, which is trading rules, working on the specific rules of your trading plan. Remember that there are videos here in the content library, trading plan videos. Trading rules is this one right here. Last week, we did market posture. And in market posture, there's 2 core postures we talk about. We talk about market posture, which is the overarching analysis that we have for the market at any given time. And then we have our trading posture. And the trading posture is, what are you doing today? So if I say to you, my market posture is now slightly bullish, or it's at the bullish end of neutral, does that mean that I can put on a trade or two today? Well, it opens the door that if I have signals, but my signals are going to be determined more from my trading posture, What is my trading posture? Well, my trading posture is going to be more oriented to specific levels of support and resistance. If I am at or near support, my natural inclination would be more to have a bullish trading posture. If I'm at or near resistance, my natural inclination would be more to have more of a bearish. So then people say, well, we're at or near resistance. Are you bearish now? Remember, I'm saying my trading posture. My trading posture is secondary to my market posture. My market posture is improved. So am I looking for bear trades? No, I'm not. If I had 1 or 2 that I was like, ooh, this looks really bearish, then I would do it. I'm still only at 2. I'm not taking bearish trades into a bull market, but I am taking bearish trades into an improving market. My market posture has improved over the last 2 weeks. So is that a good time to be like, hey, I'm feeling there's some weakness? No, we're seeing strength. That's why I'm less inclined to think about bear trades. Okay. We're almost finished with our watch list, but I did want to, so we are working on section 2. Since I'm here, I may as well show that. Section 3 this week, sorry. Section 3 this week is trading rules. So your watch list, your setups, your triggers, your stops, your targets, your time frames, your position sizing, basically your rules of execution. That's what you should have. If you don't have those, watch the video, start defining them. Super helpful. PGR, another insurance stock. This one does not look as good. PLTR, missed this, but at this point, all we can do is watch and see. It still looks like it's actually showing more of an overbought mentality than anything else. QQQ, you can see it's pulling back a little. We're going to see the opening range here now. We're almost 30 minutes in. When we get to the SPY, I'll stop. But a lot of these, we're just waiting for these consolidations to convince us that the sellers took a go at it, failed, and now it's ready to go the other way. Most of what, look at that. That looks great. Looks great. Just got to the new high. You can see this is pulling back. Sellers aren't doing much. So if we see a mild pullback, that's what we're looking for. That sets up our next bullish trades. It's just not there today, right? Today on this pullback, things are just sort of stalled out. Let's go look at this opening range here. 1, 2, 3, 4. And you'll notice that even right now, we tested below the opening range, but then it actually held. So this is just sitting in the opening range. We don't know much yet. It could go up a little bit and then come back down, and it could just be stuck in this opening range for a little bit. Let's go back out. Tesla actually looked okay. Tesla, I would say, has broken this consolidation and popped up out of it. Now it's pulled back and looks like it's trying to establish a higher low. And if this thing can turn, if you're a fan of Tesla, I would say that's definitely a valid and viable setup. Here's Visa. I like Capital One better, COF. Here's the VIX. So the VIX still doesn't look like it's really done much. It still could come up here all the way into like this 17 range, and I would still be like, this looks very bullish. Right? A lot of fear came out of the market when this thing fell from 22 to 14. A lot of institutional fear came out of the market there. Institutions are feeling pretty good right now. WMB, I don't want it to drop much further, but if this thing can hold up and turn, I might still take a go at this one. It's the only of the energy I still like. Walmart's holding up. Here's energy down. Financials is holding up. Industrials is holding up. Staples and utilities. Michael said, take a look at Boeing, BA. Let's take a look in the industrials sector. That's a great call out. We missed that one. When would we have liked this one? There's the consolidation. There's nothing here for us. It actually broke a consolidation right here, and then it failed to hold up, and it kept going down. Then it broke it right here, pulls back there. If this had been on our watch list, this is one that we would have said absolutely yes, and you'd be in that trade. So that's a great call out, Michael. Appreciate you bringing that to our attention. Hopefully you're in it before yesterday or before today's 5% bump. It gave 2 good days to give potential to jump in. That's exactly what we're looking for. And you can see right? We're not trying to call out these bottoms down here. We're not interested in these. We're not interested in that until we see what? Until we see confirmed sentiment shifts. What does that look like? It breaks a consolidation, makes a higher high, then comes back and makes a higher low. A lot of the stocks we see look just like this, but we're waiting for this pullback here to happen. Most things look like this did right back here. As you went through our watch list, you saw it over and over and over again, right? it had busted out. Well, that one actually did give a higher low. Let's go to NVIDIA. There's the consolidation. I'm not trading this low or this low, right? Because we don't know that this is coming. Now we're like the buyers are back in charge. There are definitely times when I'm like, oh, I should trade more breakouts. I'm not a breakout trader. I tend to see breakouts as pausing, pulling back, and then turning. But when we see a sustained 8-10 day move, that's the only one of these you see. Look back to the left. Do you see another one of those? That's the only one. It's hard to trade for that when you only get one a year. We're trading for these to make money off of all of these over here, right? There's a lot of opportunities. That's what we're looking for. So what does that mean? That means that right now we have to be patient. The last thing we want to do is jump in only to watch it pull back and then give a great trade over here that you're not ready for, although not this one. Why not this one? Because earnings, but there's plenty of others to be looking at. Yeah, okay. So what do we have? If you like, if you're looking for something, I definitely like the insurance trades, Aflac and AIG both look pretty strong. I like Capital One. So there's a couple of things, but most of the technology market seems to be a little overbought and still needs a consolidation. So now's where you're deciding if I'm going to trade, how much I'm going to trade, how many trades, how many contracts or shares, etc. Well, but things have improved. The conditions of the market have definitely improved. We see that. Don't forget. So a couple of things for this week. Number one, I'm going to send 2 emails today, one with the recording. I'm going to send a second email today that's going to have a it's going to have a Discord. Join us on Discord. And then we're going to also have the foundations course Tuesday and Thursday. Tuesday night, 8:30 p.m. Eastern. Thursday night, 8:30 p.m. Eastern. Options. Intro to options this week. And this is a precursor because we are actually in the process of now formally creating a options foundations course. It's a 4-week short course that'll be ready for December. So at the by the end of this month, we will have finished the entire Trading Foundations course, and the entire Trading Foundations course is at your disposal in the content library here. So all of these links, technical analysis, risk management, stages of a trade, trading psychology, systems, posture, fundamentals, routines, trading plan, record keeping, all of that's there. This week we're doing intro to options. Yeah, I'm excited. I'm glad to have this first pass done. I was looking at my slides and I'm like, you know what? I'm gonna on the second pass, I'm gonna put some images and some colors so we not be so boring. Okay, awesome. It's great to see everybody. We had a great show today, which means as we see our numbers growing, let's definitely leverage each other. And that's where Discord comes in, sharing ideas and insights and progress. It's a great sounding board. Join us there. I've got some ideas to create some almost even like some events where we can all kind of come on at the same time, things like that. Anyway, it's good to see you. Have a great rest of your morning. Enjoy your day. I'll see you tomorrow evening for the foundations course. I'll see you Wednesday morning for our morning check-in. Things have gotten better, but still be careful out there. And there are plenty of things that look bullish and are getting ready to go. See you soon. As always, happy trading.